everyone, and welcome to today's installment of our roundtable discussion. We've got with us Dr. Lee Newton and Jeremy Lemire from Star Capital Management Group. Today, we're taking a deep dive on the details of land contracts, the pitfalls that are out there, some of the key considerations that you should take, and also we'll probably talk about, or we will talk about, the closing process. So, with that said, let's start with some of the pitfalls. Why isn't everybody doing land contracts? There must be a downside. Jeremy, what do you have to say?
Yeah, I think, one of the primary downfalls is that the sale is not complete, right? You're not 100% hands off. You do have some obligation back on that property. If things go wrong, you could see yourself back with the property for multiple reasons. Tax payments, it could be just disruption in the income base of the property from the operator that's running it. In my case, if it's an investment property, there are a number of things that can cause that property and that land contract to backfire and come back to you.
Yeah, for sure. Getting the property back after you sold it, that can certainly be a pitfall, which you got to sell it to the right person, right? Make sure that it goes through successfully to the end. Lee, other thoughts from you on pitfalls, things to watch out for?
Well, we probably should have a disclaimer in the bottom corner that says we are not attorneys or CPAs. This is not legal or financial advice. But I think the biggest area of pitfall is the unknown. Okay, so like Jeremy just described, what if you get the property back and it's in worse condition than it was at which you sold it, and what you collected in down payment and payments doesn't mitigate that? So that's a risk. Other unknowns are, for example, as a seller, what is the buyer not telling you about their previous life, financial situation, debts that don't appear on a credit report if you went that route? What are you not knowing and hoping that you do mitigate in strength of their down payment? As a buyer, what are you not knowing in terms of claims on the property? And that's why they make title insurance companies. That's why they make title insurance. But if someone is, if they have, let's say, the cash and the ability to make the payments, but they don't have the credit, and they're all happy that they can put the deal together, are they going to be sophisticated enough to do a title search, a lien search with the title company? And there's a cost to it, but it's nominal. And maybe even go as far, and I did this recently, get a title commitment, because in my case, the sellers were just wanting to do a quit claim deed. And well, I can quit claim to you guys the Brooklyn Bridge, as the old story goes, but I don't have any ownership interest in the Brooklyn Bridge. So a quit claim deed says I give up any rights, any property rights that I have on the Brooklyn Bridge. Well, I don't have any, so it's irrelevant. So doing a title search, lien search, getting a title commitment from a title insurance company, which will come back and say, we'll insure this transaction with the following exclusions for the following amount of money, then you're protected. But yet another unknown, and I experienced this just recently. I bought a piece of raw land, commercial land, in 2019, October, and it was a 3-year contract, 3-year balloon. And in October of 22, I had to pay it off. And I had never met the seller in person. We had closed at the title company separately. I just mailed him a check, actually every 3 months, because I was too lazy to write a check every month. I'm like, I'm just going to do this quarterly. Well, got close to October and I thought, man, this contract says I got to pay him off. So I better reach out. And I think I sent an email, or I called, and I left a voicemail message, and I didn't hear anything. And I'm thinking to myself, well, I don't want this gentleman to feel like he's been getting my payments. He's been seeing the property taxes get paid, but I don't want him to think that I'm not a legitimate buyer here. I'm in a position to pay him off, and I want to do that. And I called one more time, and his wife answered, and he had passed away. And so I had a land contract to purchase a piece of commercial property from a gentleman that was dead. Okay. And as emotionally distraught, as his widow was, and she was concerned that she wouldn't be able to satisfy the requirements. And I'm like, hey, I'm in no hurry. I just want you to know I'm ready to go here when you are. It took about a month and a half for her to get the appropriate legal documentation and paperwork to consummate the transaction. But here's the point: it could have taken 3 years.
Yep.
And what if that had held up my plans and then interest rates went from 4 to 8? And then I'm like, oh, my whole plan's changed. So that's a huge unknown and you can't predict the future.
Yeah.
Wow.
That's, I think the only other case that comes to that extensive consideration is, you can transact the property as an investment vehicle, right? Through a business entity to business entity. Kind of have a different set of ramifications and legal course actions that you can take. But if you're doing it individual to individual, I think the other thing that someone has to recognize is that you're now potentially dealing with a foreclosure. So in the case of doing something where it maybe is more oriented to a flip, where you're selling that to an outright buyer as an individual and they're occupying the property, you can get into, a different set of problems if payments stop getting made.
You made me think of one other situation that I heard of in terms of if you ever serve as a buyer, or at least for our listeners here, beware of the entity sale. Okay. I want to now, Jeremy, you were the seller, but you're not unscrupulous. Okay. So if anybody is a buyer and they have a whole group of properties that they want us to buy all at once, and the seller says, well, I have a corporation, I will give you the properties and we'll do the asset sale in terms of shares of the corporation that owns the real property, or partnership interest, membership interest in the LLC or partnership that owns the properties. Okay. If there's a claim on a piece of real property, title insurance is either going to bring it up or insure against it. Okay. But if there's a claim against an entity, a lawsuit that is going to get filed but hasn't been filed, the buyer is 100% on the hook for that. And that's a potentially unrealized a liability that a buyer could have in an entity. Somebody's going to sue that corporation, but they haven't served notice yet. Big, big deal.
Yeah, and back to the, I'm not a CPA disclaimer. I think when you do those entity sales, stock sales, you can't depreciate the asset. The asset depreciation that has already been taken continues to sit in the entity. So, in real estate, depreciation is a large part of the benefits that everybody looks to achieve. And if you can't achieve that, you certainly should know it going in,
Yeah.
which is why I think that often does not transact that way with a stock sale.